Hi YouTube, Louie here. This is a quick article on real estate, housing prices, and the effect of the Trump and Ryan tax plan on the California real estate market. And you may not be interested if you don't live in California. One of the reasons I cite California is the property values are very high. So any tax plan that changes the nature of the deductions is going to have an effect on states where property prices, values, and taxes are high. This would certainly include Chicago, New York, North Virginia, etc. So you may not be interested in this if you live in a state where property prices are low or reasonable. But if you live in a high property value state, you may want to hear what's coming up. I think it's rather detrimental to housing, and I'm not terribly happy about it. I was talking to a friend yesterday who was working with a tax planner who said that there's going to be a change to the deduction for property taxes on your federal return. So I'm going to read you this article, but that is the backdrop that the proposal is to remove deductibility of property taxes. All right, and in some states like California, it's only 1.2% of the home's value. But if the home is, over $500,000, which most are, then that's a sizable amount of money. If you're in a state that does not have Prop 13 protection, God bless Howard Jarvis, then your property taxes could be perhaps more than your mortgage. New York, New Jersey, places with Chicago, places with uncontrolled, unchecked property tax increases. So that deduction is very significant for some of us. And I'm going to read this article, which comes out of the San Francisco Chronicle. And hold on one second. Let me get rid of some of these pop-ups. Oh, sorry guys. We got videos from Silver to Burn, The Colonel, Anthony, Blue Ridge Silverhound. Do you get these pop-ups on your screen? I am so sorry. I want to know everything that's going on YouTube, but I can't keep up with it. All right. President Trump's President Trump's tax proposal for individuals would give California taxpayers some tax breaks, but take others away. Without more details, it's impossible to say what the net effect would be, but here are a few things we can surmise from the bare bones plan released Wednesday. This article was released in May 17th. Taking away the itemized deduction for state and local income and property taxes would hurt people in high-tax states such as California more than those in low-tax states. High-tax states tend to be blue or Democratic leaning. This could put pressure on states to cut taxes, but they would no longer be subsidized by the federal government. On the other hand, Trump's plan to kill the alt-min tax would offset, to an extent, the loss of state and local tax deductions. That's because state and local taxes are not deductible under the AMT. For people subject to AMP, those are very high net income individuals, losing the state and local tax deduction while escaping from AMT could be a wash. Again, the AMT hits people in high tax states more than low tax states. The Trump plan could, at the margin, make renting a home more attractive financially than buying one. Even though the plan would retain the mortgage interest deduction, so that's important for everybody, it also would double the standard deduction, so fewer taxpayers would itemize deductions. As a result, fewer people would benefit from the mortgage interest deduction. I don't actually agree with this statement, although although those with Bay Area mortgages probably would benefit. Doubling the standard deduction and killing the property tax deduction. So this is the meat, and this is the story. And the alt-min removal of the alternate minimum tax affects people with, like over $400,000 incomes, families, I mean. But here is the meat, and this is the danger in this story. Doubling the standard deduction and killing the property tax deduction. So the standard deduction is a few $1,000s, but the property tax deduction can be huge for people with 500,000, 600,000, $1 million mortgages, even if they potentially do not make enough money to benefit from the alt-min tax reduction. It would definitely nullify the current tax benefits of owning a home for the vast majority of tax filers, and could cause home values to plummet, the National Association of Realtors said in a press release. Okay, this is the meat of the story. I'm going to stop here for a minute and say that if the if the property tax deduction is removed for expensive homes, and mind you, in California, being specific again, not only do we have the 1.2% property tax on a very high number, many homes also have what they call Mello-Roos taxes, which can be up to a third to even a half of their property tax bill for improvements in their local communities that did not make their way, that were not funded by the city. So those are individually funded by the homeowner for 30 or 40 years. So I think what we're seeing here is the beginning of the topping of the property market, at least in the high-priced states. Of course, property's been very robust and come back quite a bit in California and possibly other states, but removing the tax deduction is going to have a serious effect. If you have $1 million house, let's go ahead and bring up a calculator. If you have $1 million house, and mind you, many people do that are not wealthy, they just put a great deal of their joint income into their home. Well, let's say you have an $800,000 mortgage. Let's clear that. Let's say you have an $800,000 mortgage. I know these are crazy numbers to people that don't live here, but this is kind of the reality for professionals in the state. If you have an $800,000 mortgage, your interest deduction times, let's give you a 0.04% interest rate. Okay, $32,000 might be something like your interest deduction. Okay, that's a huge deduction for most people. This same house, let's say it's a $1 million house, and let's say the tax rate is 1.2%, 0.012. Okay, your taxes could be $12,000 a year. If you want to add to that Mello-Roos, which many people have if you live in a newer home, that could increase it by 30%. So literally, the tax deduction of the property taxes could be half the value of your mortgage. All right, and this is a very specific example, but that is huge for housing. A $15,000 a year reduction in taxes at a 40% marginal rate, well, that could be $6,000. Okay, let's do this math. If you lost $6,000 a year, let's divide this by 12. So if you lost $500 a month due to the new tax plan, the equivalent in mortgage on that $500 or value, I'm sorry, let's divide this by the mortgage interest rate, what did I say, 0.04. That's the equivalent, times 12. That is the equivalent of a capital loss of $150,000. In other words, you can afford a $150,000 less house than you could before the removal of the tax deduction. And I'm sorry if I was not clear about this, but the message is the loss of the property tax deduction is going to have a serious, sustained effect on high value homes. Okay, I'm going to keep which is people are going to notice and people are going to reflect in the resale prices. Trump's plan to kill estate taxes would help Californians who pay a disproportionately large share of the plan. Let's see. The plan, which also includes corporate tax cuts, was announced Wednesday in a one-page document and press briefing by the Treasury Secretary. It would create three tax rates for individuals: 10, 25, and 35%. That's a little different than 12, 25, and 33% tax rates that Trump proposed during his campaign. Today, there are seven tax brackets from 10 to 39.6%. Cohen and Mnuchin would not say what income those rates would apply to, nor did they say what would happen to the 0.9% additional Medicare tax. I don't want to get too deep in the weeds here, but from what I've heard, the plan will benefit the extremely wealthy more than it will benefit the moderately wealthy. Let's see, what else do you want to know? Double the standard deduction. So that would take it to 25,400 for a married couple and to 12,700 for singles. So that will benefit middle income families more than wealthy families. Today, about 40% of households don't pay any federal tax. So lowering tax rates or increasing the standard deduction won't help them. This is the get a job argument. A lot of people do get actual checks in the mail when they file their returns if their income is low enough. Let's see, what else do I want to know about? The proposal would kill the vexing alt-min tax. Again, that's for the extremely wealthy. So that's a gift to millionaires, I think. And Trump would repeal the estate tax, which affects the portion of estates that exceeds $5.5 million per person. Again, a benefit to the families of entrepreneurs and wealthy people that are trying to pass on their estates to their families. I don't necessarily agree with that either. The plan would retain deductions for retirement savings, so keep pumping your fiat into fictitious stock markets, but nothing said about a host of other deductions that can be taken. It also says nothing about the bevy of tax credits available to individuals. He wants to cut business taxes to 15%. I know he wants to repatriate foreign money, so I am in support of that. There is the article. Mnuchin said the administration would work with Congress to prevent that from happening, but didn't say how Keith Hall, CEO of the National Association for the Self-Employed, doesn't see how to create a tax that applied to sole proprietors but not to freelance or independent contractors. This is in relation to a 15% business tax could create incentives for employees who, under the plan, would be taxed at rates up to 35% to become independent contractors and pay just 15%. In California, there is a movement to basically kill and eradicate independent contractors because they don't pay all the taxes that employees pay. Well, I've gotten way too deep in the weeds, but anyway, that is the article on real estate. I think it is a definite harbinger for a top off in California real estate prices. Look for serious declines in prices as a result of this plan if it passes, and it has not passed. However, Paul Ryan has vowed it will pass this year, and I kind of doubt it. I kind of doubt they'll get this through. But anyway, if you are thinking of selling your house, now might be a good time. This is Louis signing out. Thanks for listening.